Hello, everyone, and welcome to another episode of the Automated Advantage. Today we have Jerome on. So, Jerome, why don't you introduce yourself and tell us a little bit about your company?
Hi, great to be here with you today. My name is Jerome Rousselot. I'm the founder of JITADigital. I founded JITA in 2015 in London, initially to build the first microcredit platform using blockchain to move funds between the UK and Indonesia, for instance. Microfinance and remittance, this kind of retail small money transfers. So then we evolved the business because we encountered financial regulations over multiple jurisdictions, which is complex and expensive and undefined, unclear, let's say, especially around blockchain. Now we are 11 years later, and we are starting to see some clarity from the regulators, including the SEC in the US recently. So that's it's progress. But if you can't wait for 11 years, then you have to pivot, ideally. So that's what we did, and we've been offering blockchain security audits, which is a non-regulated activity. It consists of working with businesses that build software on blockchain. It can be new blockchains, like new so-called layer one. It can be a bridge between a layer one blockchain like Ethereum and a layer two, such as Base or Arbitrum, which offer higher speed transactions and lower cost. It can also be smart contract, which is more at the application level. In financial applications for smart contract, typically you'll find over collateralized lending, which is extremely popular. You'll find decentralized spot marketplaces like Uniswap, also extremely popular as competitor to centralized exchanges such as Coinbase, let's say. And now we see perpetual, so futures. You can it's a new type of futures that you find on chain that don't exist in traditional financial markets. So we see a lot of innovation, a lot of financial volumes on this kind of applications. There are other applications that are non-financial, but our core business is focused around innovation around finance.
Yeah, that's interesting, and it's definitely different to a lot of people we speak to, and obviously that the whole wave of crypto and DeFi and all of those things, and like you and I've said, I'm a product of some of that. I do the DeFi, I do the lending, and then earning money on the lending and things like that. So very familiar. And I grew, talking to you in the past too, is I do remember the like it's an interesting business in the sense of people know that they need to do an audit of their app, but like it's never really well scheduled. So from our conversations, it's like you guys get there, hey, my app's ready, come and take a look at it. So maybe just take me through your client life cycle, the engagement, and then what do you actually do and get to kind of get the client to a point that they say, okay, my app's ready for release now.
Absolutely. So it's quite a niche industry. Blockchain security audits are highly specialized, and our clients are also highly specialized. Typically, they raise some funding, either self-funded or pre-seed or seed stage. So they have a runway, and they know what they want to build, and they pay these developers. And at some point, we are introduced. Either we meet in person at a conference, or someone we know introduces to each other, and we have an exchange, some messages or initial video call, and we learn about their product, where they are incorporated, which is very important. So if internet is global by nature, but financial regulations are national also by nature. So there is a big conflict there, and then you have to be careful with who you're working with, where they are, understand who is behind the entity, and what it is that they are building. Of course, then they always hope to launch very soon, but generally software development takes more time than expected. And generally, their dev team will they know a lot about a lot of problems. They don't want to do an audit to be told about things they already know about. So the audit tends to get postponed again and again. depending on market cycles as well, because a lot of clients will want to be launching as soon as a kind of a lot of momentum and new capital in the industry. Last year there was such a cycle for 6 months, 1 year. Everybody wanted to launch during these bull markets, so-called bull markets. It remains, from some people's perspective, last year there was a bull market. From some others there wasn't. But now certainly it's cooled down. So people will be managing their runway again until suddenly this is time to launch, and everybody wants to launch and be audited at the same time, which has an impact on auditors' prices as well. So this is a complexity around the business models in this industry, the high volatility and the cyclical nature. While in 1 year you can really be busy nonstop, which is also is challenging to manage this pressure nonstop. You want to service the client, right? They want a service. You want to make the client happy, but there's only a limited number of audits you can do per year, and find auditors and so on, and deliver high quality audits. So this is definitely a challenge, and we hope that over the years now we are getting to a point where these cycles are slightly stabilizing. So we encounter them, we meet them, we discuss, and maybe they think they have to launch soon, so that we are close to do the audit, and suddenly maybe within the team someone will change their mind, and maybe funding around isn't happening. So sometimes the audit can be dependent on the next round of funding as well.
Yeah, so actually, I don't remember us talking about this. So thinking through your audit, and you touched on something that said, look, they're developers. They obviously have a development cycle, and they have a testing cycle, and then they have a review cycle. Like, what are you guys, and some, like, more so for somebody who's now considering launching an app or doing something and says, oh geez, I didn't, I know I need an audit, or I didn't know. What do you do on top of like their quote unquote typical testing and development life cycle that adds value? And then maybe the second follow-on question, is it a requirement to have an audit before you go live?
So how do audits compare to standard test and development software lifecycle in blockchain? So the answer is that one is done in-house by the dev team, and often generally there are not so many developers. There's a lead dev, and sometimes they do a lot of it themselves. Maybe there's another dev, or there's a smart contract dev, and then the backend and front end dev. And now with AI, you won't see bigger teams, so there will be even more pressure to perform with a smaller agile teams, generating more code, larger code bases by one person or two persons. Now we have all these automated tools to generate more code. This is actually great for testing, and you can develop more standardized testing frameworks. The code is more standardized, so the coding style is better, but it also leads to larger, more complex code bases by nature. So it's a major evolution that we're seeing. And so I would say that the audit market is becoming a higher risk because teams can move faster, evolve faster, and bring up more code faster than we are used to. And if you move too fast, then it's more likely to break things. And from the client's perspective, time is money. You have to manage a budget and launch as fast as possible. And so we have all these great tools. So why do we still need them? It's a challenging time actually because of all these constraints right now. Audit is outside the team. So you build the house, and maybe you're great at thinking and are building houses, but maybe we're all prisoners of our own minds. Sometimes it's good to have external third-party advice. So before opening the house and putting it on the market, it's great to have some third-party experts that are independent from your own team to look at it and give external feedback. And so audit is about technology, about staying on top of the evolution of technology innovation, and also communicating and evaluating correctly. Okay, this is important, this is not important. For severity issues, critical, high severity, low, or comment. And there will be some pressure from the clients on the management side, sometimes to elevate the severity of issues, actually, because they want everything to be fixed. But some issues are more important than others, and we have to evaluate things fairly. And the goal is to work together to create more secure software. We are not an insurance business. Nobody offers insurance, because especially with the volatility of price and the scalability of these systems, one day there's 100K, next day there's 100 millions in these systems. So it's difficult to insure the systems, but we all work collectively to build more secure systems.
Okay, that's really helpful. And then the last question related to this topic is, if somebody launches their app and you've done the audit and everything's running, is there a cyclical thing so that you, when they implement enhancements or whatever it is, or continue to evolve the app, do you come in and then re-audit at stages?
It's a great question. Smart contracts are logical systems deployed on chain, and they exist independently, kind of. They are not running on Amazon directly. They run on a network of computers, some in Amazon Web Services, some Google Cloud, Litzner in Germany, anywhere. So it's decentralized entities. Legally, it's a new machine, it's a new type of thing. And so it is not completely immutable. There is this idea everything is immutable on the blockchain, but a smart contract can be upgraded, which is a high risk of create complexity and also security risks, directly and indirectly. And so each time the software team builds new features and they want to publish it online, and so they can upgrade the smart contract. So you have the new features and then the upgrades process as well, which are two different things. You can build a new feature that is great, but then if there is a problem in the upgrade process, so the scope of the audit is very important. What is part of the audit? What is not part of the audit? And each time you modify a smart contract, it has to be audited again. It's part of best practices, but of course, the more you change, the more you publish smart contract, the more audits you need and the more expensive it gets. So you could choose to be audited each time you modify it, ideally, or maybe to be done once a year, depending on the company life cycle.
Okay, now that's again very interesting. So let's jump into the world of an entrepreneur and a business founder. So you started a few years ago, you had an idea, things evolved. So maybe the question becomes, what was the impetus to start out on your own? You were working for a company, you didn't like working for a big company. You decided when you were in college you wanted to be an entrepreneur. Like, what was that? And then maybe if somebody is sitting there today saying, yeah, I think I'm going to go and start my own business, like a couple of words of advice to them of things they need to consider.
Sure. So I did a PhD in wireless communication systems, kind of Bluetooth, but decentralized. So I always liked innovation and bringing technology to market, I think, and worked on some startup projects on the side during PhD, but nothing came out of that. And then I worked in semiconductor really for a few years, and it was great, but you could feel kind of repetition. So you can feel professionally you always do the same thing. Although it was really interesting to ship huge quantities of product, like 100 millions, and that was the target per year. So the scale is very interesting in large companies, and that's definitely a great experience. And work in a highly competitive environments as well. But startups are smaller, more agile. It's maybe more fun, but it's also more high risk. So depending on your risk tolerance, maybe don't do it. And probably it will be always like this. Oh, we can think, in 3 years time or 5 years time, it will be this and that, and it'll be so different. But you have to enjoy the journey as well, because otherwise the outcome is not guaranteed, right? It's high risk. So you have to enjoy what it gives you, and probably if you're in it to make money quickly, maybe to be disappointing. So you have to be aware of that, and there are several ways to do it. Right? People all the time talk about SaaS and VC-funded startups, but there are many types of businesses. You don't have to be a VC-funded startup building a B2B SaaS. these days these things are a bit less popular anyway, but so there are trends, right? And you have to find the right business model for you and how you can create value, which type of clients you can address. Is it B2B? Is it B2C? I think it's different people who are good at B2C or B2B. Generally, B2B seems a bit easier because the clients have larger budget. And often you find people who work in an industry close to what they were doing before. So they already know about the business problem. It's not just they read a book or they had this idea and suddenly they start in an industry they know nothing about, although it does exist. But it's good to understand where you are strong, how you can create value, and how you can grow, and something that works for you as a person.
Yeah, no, I think there's a couple of key components there. So, I mean, what you said about the time to benefit, let's call it that, is some people told me in the beginning, it's like, look, if you think you're going to get your first client in 3 months, make it like literally double it, because it's going to be that. So what some of the things that I've found is, and in addition to that, is your timeline for driving something forward is not necessarily aligned with the prospect or the client's timeline. Like you, and so you, I think you're suggesting that as well. And there's kind of comments on that as far as like.
Absolutely, because when you work in a company, there are many problems you have no idea they exist because you never encountered them. So you're specialist in some domain, and then you have all these other people in the company, and you think they are not doing anything, but they are. They are opening business bank accounts, they are sending invoices, they are pressuring people to get the invoice paid, because in some other company, maybe there was rotation or someone is on holiday, and then for 1 month nobody at the company is answering, or your point of contact moved to another position. Maybe even if you got the contract and you deliver the service, and the company maybe pays T plus 60, so 60 days after you send the invoice, even if you wrote 30 days in your contract, and then maybe another 30 days is lost. You have the time from the lead to the sale, which is really you signed a contract or similar commitment. Then you think it's all done, but it's not done at all, because you still have to deliver the service, and then you have to send the invoice and track the payment while still managing the customer relation, right? You can't be pushing for money every 5 days. So all these things are stressful, and you have to learn, but the more you do it, the better you get at it. And you learn how to anticipate the whole cycle. And back to your point, there are many delays here. The first time, time to sell, and then time to deliver the service, and time to send the invoice, and time to get the money in the bank. And if you're self-funding, or if you raise a bit of money, then you, as you said, maybe it will take double the time you thought, or maybe 3 times. And it would be a pity that the business fails because you didn't expect these delays. So you always need twice as much money as you think, probably, to last long enough to generate the leads and get moving.
Yeah, no, that's actually interesting, and you say that because coming out of like 30 years in corporate America, large public companies, and we were on the hook for forecasting revenue and things like that. And when you're a multi-billion-dollar company, you realize like it's really important, and because they have shareholders to account to. But when you're doing it for yourself, you're like, man, now I get it. Like I got to forecast the revenue, forecast stuff. It takes I was always under pressure as a leader of a team, but it's a very different, not pressure, but kind of like focus.
Experience. It's a different experience.
That's it, exactly.
Yeah.
So talk a little bit about maybe the structure of the company and your team. I know you said co-founders, so partners and stuff like that. And then I also believe when you do get an audit to do, you sometimes engage people to help you. So like how does that all come together?
So I'm founder. So initially I had some other people helping me on the blockchain microfinance startup a long time ago. But I fully own the company, which is actually not that often the case. And because of the business cycles and the large, the huge volatility in these markets in 2019, 2020, Then 2021, 2022 bull market, then FTX crash. For those who don't know, FTX was maybe the largest Ponzi scheme in the world ever, 12 billions, if I remember correctly. After that, for a while, there wasn't much money moving, let's say this way. So it's very hard to maintain a stable team, and then people also themselves can find good opportunities and can also monetize the experience very quickly with extreme business cycles, let's say, and career progression sometimes in this industry. Our team, because of all these reasons, our team is freelance. So if someone helping on the marketing side, legal advice, which is more stable, is very important. A strong legal framework and legal advice, and it's a highly specialized field, especially when you deal with all these jurisdictions. Very sensitive topics such as finance. And then, of course, the auditors. If you have auditors in the blockchain world, generally they've been in this space for a long time, so they've been experienced. It's not like they need a permanent job either. And you'll find different auditors specialized in different parts of blockchain. Blockchain is not now a huge space. Many people are specialized in Solidity programming language, maybe Solana, a Rust programming language, maybe DeFi applications. Maybe some people do only infrastructure, and some other people can do have a wider spectrum of competences.
Yeah, that's actually, so I think that it highlights an interesting point again, in the sense of, when you talk in the context of starting a business, like, into, I think it's different. And I mean, you've been doing this for a while, so maybe it's evolved, but maybe it's been the same. But I think in today's day and age in particular, there is so much access to, call it, specialization, right? So you don't need to have a legal team and a marketing team and a development team and on staff, like, chewing up money while they're not working. If you can create this tight network of trusted people, I think it's a really, it's the business model of today, and maybe more so of the future. Are you seeing that? Is that an accurate statement?
I agree. Also, some companies are very well funded and can afford it because of their large balance sheet. They can just hire a lot of people, and often people will be quite happy to have a stable job and a stable position for years, especially in a high risk industry. It's de-risks their career. And so it's difficult to compete with that. And obviously, you can't compete face to face, and you have to find your niche and the type of clients that are happy working with you. So it's very important to differentiate as well. So there are different business models, and people with access to significant capital have can operate differently than us. But at the end of the day, when you sell equity to investors, then you have strong pressure to perform. And it's not like free money. It's a very expensive form of money if you sell equity. Deliver strong returns and double the company size every year or so or more. This might not always be possible. And people get these jobs, maybe they have the stable job until they don't, right? Sometimes these companies, especially in this industry again, it's very typical to see 25%, 33% layoff every 2-3 years. Coinbase was doing that just a few years ago.
Yeah, that's a terrible trend, and I think you're right. It's like, rush, higher. I'm sorry, okay, we're changing our mind, downscale, and then upscale. And I think, yeah, I mean, I think the point becomes to folks is, look, to Jerome's point, it's, you've either got a lot of funding and you've planned it out, and you do it like that, but there are alternatives to being able to really create a tight network of people that you trust to scale your business to the point that you can then get to the point where you make the decision and say, now do I slowly bring on people or whatever it is. So yeah, I think
exactly, you're right. And the key word that you use is trust, and you find the right people to trust. It's difficult.
Yes.
In our industry especially, so a good check if people are ready to give you their full name. That's already a good point in our industry. So a good sign. Then second point, they tell you where they live. and they to use the camera and show you their real face. In our industry, especially blockchain security audit, there are many auditors. They don't give you their name, right? They say very expensive security audit, and you have just a pseudonym on the report. You have no idea who did that. So I don't know. It's only in this industry you can find things like this, and they will sell this audit for a fortune. I mean, there is a big company putting their name on it, well-funded company, but at the end of the day, you have no idea who is doing the audit. You have Dark Turtle and Art and some other strange 0x111100 and 1F. That's your auditors. The next time it will be at Yellow Dog, and then I don't know what name that they will come up with. And I don't know. It's still immature industry in many ways, I think. And of course, it's for some of the clients, it's an on trend actually. Because this market is a niche blockchain, but then you have DeFi, and then you have the enterprise blockchain and capital markets participants. There are many different types of clients. Not some people will like it and they feel they are in the Matrix or something. They feel like they are actors in some movie, and some others they won't like it that much. These anonymous people who don't show their face, you don't know where they are and what is their name. And this is an opportunity because there you can try to find the clients who are more comfortable with a certain type of auditors.
Yeah. No, I think that's and I mean that's interesting. You said that the quote unquote newness of the market, but I mean even coming from IT consulting in my day, that market, I mean, it's got to the point now where we wouldn't take anybody in unless they were on camera, because we all know that somebody else is either doing the interview for them, they can do a chat thing to pop up the answers and give you the perfect answer, and it's like you got to go and ask for resumes, you got to go and ask for stuff. So even in that really mature market, there's still chances out there, and I think people take chances on these waves, and 50% of the time they'll be lucky and they'll do okay, and then it's like it goes like that. So this was a really enlightening conversation. It's like I say, I always love to have quote unquote a different kind of business that I've never spoken to somebody that does what you do. So just remind everybody again, how to find you, your website, LinkedIn, and all of those things. And and then if you're a company that looks, or if you're an app developer or looking to release an app, come and look for me. So do your little commercial.
Sure. So if you're building blockchain-enabled software, if you build smart contracts, or if you're an auditor or someone wanting to switch to the auditor side of the business, you can contact us. Find our website at JITADigital, JITA digital.com, and message me on Telegram or email, Jerome@JITADigital.com.
Beautiful. Well, Jerome, again, you and I have had a couple of conversations. I always find them entertaining and enlightening, and so thank you so much for joining us today.
Thank you for having me.